The crypto winter spreads to NFTs as monthly sales collapse. I'm Joel Flynn. Welcome to the Daily Forkast, July the 4th, 2022. Bankruptcy and bailouts continue to dominate the world of blockchain. A plummeting market for NFTs shows that contagion is reverberating throughout the crypto market. This is what's happening from Asia to the world.
Join thousands of NFT traders who already start their day on CryptoSlam.
It is already shaping up to be another potentially frightening week for crypto markets. As investors look ahead to US jobs data due out Friday, Bitcoin prices have been steady. They could, though, be set to fall further. NFTs, meanwhile, are feeling the bite of the crypto winter. Sales data out from CryptoSlam showed the market fell short of $1 billion in sales for the first time in a year. Plummeting crypto prices are of course to blame, but worryingly, the number of unique buyers has dropped by almost half in the last 6 months. Here's Forecast's Lachlan Keller with more.
NFT sales were skyrocketing last summer when Axie Infinity took off, putting play-to-earn gaming on the map. However, the crypto winter has now hit, with Jonathan Miller of crypto exchange Kraken telling Forecast that turbulence in the crypto market, coupled with a downturn in traditional finance and tech stocks in particular, has become a perfect storm for a loss of confidence. And NFT expert Anndy Lian told Forecast NFTs are being hit particularly hard.
Many of these prices were just inflated by a lot during the more bullish times. So when the bear times kicks in, the adjustments in terms of pricing will then be very significant.
Indeed, the floor price of a Bored Ape Yacht Club NFT fell below $100,000 for the first time in a year last month. That's roughly 80% down from the dollar price in late May. Ethereum remains the most popular blockchain for hosting NFTs, and its price has fallen 60% since May's crash. And while the middle of a bear market may seem an inappropriate moment to get involved, Kraken recently joined Binance and Coinbase in opening a waitlist for their own NFT marketplace. However, Miller remains confident, saying the seeming collapse of closed-book lending businesses may be viewed in the longer run as a reminder that open, transparent infrastructure is ultimately the foundation upon which a new wave of digital financial tools will be built. He says the projects and businesses that stay as true to this as possible are the ones that can weather the storm. Meanwhile, Lian says the best is yet to come for the NFT industry.
If you look at it from a market share perspective, I still think they are relatively new, to be honest, because there are a lot of bigger companies that are trying to step in, and they have not made their big moves.
Lian says that when the market does recover, NFTs could move faster than crypto. He says two types of projects are likely to thrive. Simple ones that rely purely on good graphics, and more complex ones which generate real revenue by being part of a DeFi or play-to-earn project. I'm Lachlan Keller, Forecast.
Fears are growing about the potential for the contagion to spread further. At the center of it, Three Arrows Capital, which has just filed for bankruptcy in the US. The crypto hedge fund is hoping that this Chapter 15 move will potentially shield its US assets. We know that Singapore is intensifying its investigation into the firm as well. That is registered in the city-state as well as the British Virgin Islands. In the BVI, a court ordered 3AC into liquidation just last week. That liquidation came after 3AC defaulted on a $670 million loan from Voyager Digital. Voyager has had to pause withdrawals last week. It became the latest crypto firm to do so, and it has just said on its Twitter it's looking at options to try and protect customers' assets. BlockFi is another big name whose big loans to 3AC threaten to drag it under. It, however, has been given a lifeline. That is according to reports over the weekend. Sam Bankman-Fried's FTX has agreed to provide $400 million in credit that is supposed to protect withdrawals for customers and creditors at BlockFi. BlockFi has said the deal represents a total value of $680 million. That includes an option to acquire the firm by FTX for $240 million. Withdrawals at BlockFi jumped last month. The lender said it was getting rid of 20% of its staff as well. All of this adds up to a fraught and fragile state of affairs for crypto markets ahead of key US data being released later this week. If you want to stay informed, make sure you head to forecast.news. We have got the latest on what's happening and agenda setting analysis of what it all means for you. A fire sale in assets prices plummeting, contagion spreading, crypto firms are struggling, but Wall Street is now on the prowl. Let's find out how with Annabelle Huang, who's managing partner of Amber Group. Annabelle, great to have you with us as always.
Good to be here.
Listen, we've just been talking about FTX's continued acquisitions. Morgan Creek, though, did try to make a move on BlockFi as well. Meanwhile, Goldman Sachs has been raising $2 billion to try and buy assets from Celsius. Give us an idea of what all of this means.
It is quite an interesting move from both, I guess, the big Wall Street banks and also crypto VCs looking at the situation. I think it's very similar to what we call a special situation or a distressed situation where if the valuation makes sense, I think it does make a lot of sense for either Goldman or other players to step in and to take a look at the assets in question and see whether it is worth an investment. But it is interesting because now we're getting a closer look at the few firms that are in question, taking a closer look into their financials, to their current situation. So with BlockFi, if the rumors were true, with Morgan Creek's $250 million bid to take over a majority stake, that brings the total valuation of BlockFi to less than $500 million, which is at a steep discount to where it last raised. So I think it just gave us some, I guess, insight into the current situation, and we're all keen to see how it unfolds next.
Annabelle, will we see more Wall Street players or big companies making moves to try and take advantage of this fire sale that we're seeing in crypto right now?
I think it could be likely. Again, I think this is an investment decision. So if the assets in question, especially at a very steep discount to the book value or to whatever the players think it is worth, that's actually quite a good time to purchase these distressed assets. And if the market recovers or if the company can remain in operation, can quickly recoup the investment amount. But I would say that for a lot of the crypto native firms, the priority might be to preserve the liquidity that they have so that we do have enough runway to survive the down cycle. Nobody knows how long it'll last, so it's always good to be cautious. So I think we won't see that many so-called helping hands from the more crypto native space spending big on situations like this.
And what sort of precedent could this bring to the crypto space in general? Most importantly of all, what will this do to help crypto investors ultimately?
I think having these big name players stepping in, providing backstop liquidity to the market definitely boosted the confidence in the market a bit. So we're seeing everything stabilizing a bit more compared to when the news first broke out on Celsius, Three Arrows, the likes. So I think it is helpful in that sense that it gave market a bit of confidence in that regard. But I think in the long run, it is a great lesson for all of us to keep improving our risk management, counterparty risk management, credit risk management procedures, and not always counting on someone to really lend you a hand when things happen. And I think most of us, the market, a lot of investors included, have definitely learned a lot from what happened in the last month.
All right, Annabelle, thanks for that. That was Annabelle Huang, managing partner of Amber Group. Well, the crypto winter started with Terra Luna's collapse. Although that has caused all sorts of problems through crypto markets, it has specifically raised questions about the future of stablecoins. Last week, Forkast gathered some of the top experts in the industry to look at what that future is. Here's Forkast's Carolyn Wright with the key takeaways.
While the crypto market has cycled through similar slumps before, the twist this time is the erosion in trust in stablecoins. That set off alarm bells for financial market regulators around the world. Jason P. Gottlieb of law firm Morrison Cohen says that while some current rules do work, there are a host of square peg, round hole problems in crypto.
Rather than focusing on any one particular person, I think what regulators have to do is both look prospectively to see whether what's going on fits within regulations or is violating regulations. And when they're looking at something retrospectively, they have to examine the facts, examine the law, and see whether someone has violated the law.
Gottlieb says that while several regulatory agencies have been proactive in claiming what they think the law should be, they haven't been so active in promulgating new regulations that are applicable.
I think when we're talking about stablecoin projects, we have to remember that there are many different flavors of them, right? If somebody comes in and says, we want to have an asset-backed stablecoin and we're going to back it 1-for-1 with US dollars in the bank, then that strikes me as actually an incredibly safe kind of system. If somebody wanted to redeem their stable coins, you could just go to the bank account and hand them back their cash and there's no problem.
Caroline Pham, Commissioner of the US Commodity Futures Trading Commission, or CTFC, says the priority is figuring out what can be done to protect retail investors and prevent further contagion.
I think it's quite important, though, that we engage all of the commissioners at each agency in these discussions in order to leverage each of our backgrounds and our expertise. And so that's why, again, I've called for public roundtables where we can have that kind of fulsome discussion and really look at these things. But I think it is so important that the agencies work together. I think joint roundtables between the CFTC and the SEC makes a lot of sense.
Pham says education is key, so people understand that there are risks and no guarantees. She also thinks regulators need to evaluate the technological potential of stablecoins, saying they could have a role to play, but the right guardrails need to be in place.
I think a technology-neutral approach is going to allow us to capture the benefits of stablecoins, the ability for it to have faster payments, to be always on, to be real time, to provide access and inclusion for those economies around the world, those jurisdictions where there aren't mature and developed payments infrastructure.
Zerocap's Trent Barnes agrees that education is important.
It's great to regulate, but in terms of, I think, really education really needs to be front of mind for a lot of investors, particularly retail, that are getting burned and getting wrecked.
Zerocap's Barnes is also excited about the potential for development to come in the space.
I still think algorithmic coins are a financial scientific experiment, but I think it's really interesting because as we saw through the late 90s, early 2000s, a lot of the innovation happened then, basically built the rails that we of all the platforms that we use today. So the ones that failed then provided those rails. So I think I'm still interested to see what innovation can happen within algorithmic stablecoins coming up in the future.
If you'd like to check out the discussion, it's available to watch in full at forecast.news. I'm Carolyn Wright, Forecast.
All right, that's it for today's Daily Forecast. You're up to date on what's happening in the world of blockchain. We have got more updates though on our social media channels. Head to our Twitter at @forecast_news. Again, our website, forecast.news. Make sure you head there for agenda setting analysis. For now though, I'm Joel Flynn. I'll see you next time.